Hello and welcome to today's class or teaching. So in this, I just want to share with you all a very quick strategy that you could use to make some quick scalp moves for yourself. And it is using an ICT strategy. I'm going to be blending it a bit with something else. And most of that model for entry, I actually picked it up from someone I admire a lot. His page is Hydra Trades ICT. I'm gonna tag his page in the YouTube so you can check him out as well. But the concept we're going to be talking about today is macros, ICT macros. What are ICT macros? Now, a macro is essentially a point in time where something repeats in the market again and again, okay? So a macro is a time, it's a specific period of time when something repeats over and over again. So it repeats over and over again. So what are the ICT macros? We are gonna put in a bit here. These ones are approved by ICT himself. So ICT macros include 9:50 to 11:10 a.m. By the way, this is New York time. Then we have 10:50 to 11:10. Don't worry, it's gonna get clearer as we go along. Okay. By the way, this is 10:10, not 11:10. 10:10. All right. New York time. All times I'm giving you in New York time. If you notice that my timer is set to New York time. Then there are others, but these are the three that I'm gonna give you to focus on this period. So we have 3:15 to 3:45 p.m. Okay. There is another by Hydra. Like I said, I'm going to drop his YouTube handle in the comments so you can check him out as well. So, and he's that also uses 8:20 to 8:30 a.m. All right. So what are the things we are looking for? We are looking for a run on liquidity, and then we're looking for a breaker block, and that will be our entry, and that's literally it. It is so simple. You're not going to believe it, but if you actually backtest this, I'm not going into so much details in this video. Later on, I'm really literally making this video just to put it out there so that somebody that is just looking for something, to take them to that next level can quickly grab it and backtest it themselves. I'm only going to give you a couple of examples, but if you are ready, those examples should be more than enough for you. Of course, I'm willing to answer questions. I'll still make other videos to go into much more details. There I'll be explaining some concepts like what is a breaker block. For example, if you're new to ICT, you don't know what a breaker block is, but just be patient and trust me, this is going to be so worth your time. All right. So these, by the way, we're trading this. What I'm showing you guys now, we're going to be doing it on just indices. And for this example, I'm going to be using US 30. It works on ES. It was on XPS 500. It works on the US 100. But right now, we're just going to focus on the US 30, okay? Because I just want to show you guys some quick examples. So the things that we're looking for a run on liquidity in one side. And then we're looking for a displacement in the opposite direction with a fair value gap. And then we're going to enter off the order block, okay, while targeting opposing liquidity. This is a whole lot of grammar. So, because I don't like overcomplicating things, especially if you're already familiar with, ICT strategies, we have a lot of concepts and terms, but I want to keep it real simple. So this is my chart for if you check, today is Monday. This is the 10th, right? On a Monday. So, and I'm on the 1 minute chart. Okay. So first thing you're gonna do in this example, we're gonna use the 3:15 to 3:45 p.m. macro. So first thing you do when you come on your chart is to mark out, let me get this out of the way. Cool. So look at the chart. Where is it right now? We're just going to mark out 315. All right. We're going to assume that what has happened on the chart hasn't happened already. But like I said, you can forward test this, you can back test it. It happens. It is real. And if you're like me, that was so excited when you discovered this because it would be the game changer. I'm sure you've heard of, or if you're not new to it, you would have heard of market structure shift before, you would have heard of fair value gaps before, or something might have been missing in terms of your consistency in winning. This is going to change the game. I promise you. All right. Well, since I promise you, no guarantees in this industry, but you get what I mean. So I'm going to look for 315. There it is, somewhere here. That's 15:15 p.m. Note again, the time is New York time. So prior to this, we're going to assume we're going to come on the chart by 3:15. Prior to this, we're just going to look for what are the most obvious liquidity points you can see, most obvious highs and lows. Off the bat, you can even just see this one right here. This. So when I'm coming on the charts, I'm just marking up this. All right, good. This is a liquidity point. And it's a swing high, right? Then I'm going to mark up a swing low. Okay, so we come on the charts by 115, right? Then we're just looking for, remember, a sweep of liquidity. So we're looking at a sweep of liquidity, and then we get it here, okay? And then in sweeping the liquidity, we must get a breaker block, okay? So not just random candles doing what they want, we must get a breaker block. So here is your breaker block. This is what it breaker block looks like. I can't go into details of breaker blocks in this video, but hopefully subsequently I'll be able to do it for you guys, okay? You can always look up just on YouTube. You can go and look up breaker block. Okay, there's one by an amazing ICT trader as well. I think it's T Trader or something like that. You can check it out. Okay. So right here, basically what you want to see for a breaker block, you want to see price buy. If this downwards buy, right? You want to see now take out some liquidity and then close, have a candle close above this, okay? So that becomes your breaker block. So for example, in this our example right now, this is our breaker block right here. Let me try and put a triangle, rectangle on that. This right here, this buy movement to sell, this right here. All right. I'm just trying to use simple terminologies that you can follow so that it's not complicated. So this right here is our breaker block, right? You can see this part now. Price bought, right? Created this high here, took out our liquidity, and has displaced upward. And you can see it closed a candle's body, not just wicked it. If you wicked it, it doesn't count. It has to close a candle's body above. Then where is your entry? Typically, you could actually enter on the next candle. But personally, just to get a better risk to reward, I like to wait for it to take out, for it to retrace to the breaker block, okay? So my entry would have been somewhere here. Let me show you guys. Okay. Okay, this is this. And then first place you target is this obvious point of liquidity here. Not the best risk to rewards, but take your partials. But you can aim for 1:2. Okay. And anything above that is just a bonus, but typically aim for 1:2. But you should be able to collect your partials at this point. Okay. So you can see this works on the point. What is the time? All this is happening between 3:15 p.m. Look at it, and 3:45. Where is 45? Look at that. It gave us our entry exactly at 15:45. Just in case you think this is a coincidence, I told you, because if you're trading ICT concepts, it is based on the fact that all of this is an algorithm, is controlled by an algorithm. Okay. So let me try and get on another example for you guys. So let's go to Tuesday. This same thing I'm showing you, you can check it out for the other macro times I gave you, okay? So, okay, cool. Let's look at 15. This is Tuesday now, the next day. Let's look again. We'll mark out, where is our 15, 15, our 315. Then, so we assume we're coming to the chart at this point. That means all of this hasn't happened yet. So where is our entry? So first thing you do, you mark out this obvious liquidity pool here. And then you can mark out this liquidity pool here. You can also mark out this. This is a great, this also counts. Okay, it's a swing high, swing low, sorry. All right. But let's just take this one off and look. So after 15, did price run any liquidity? Yes, look at this right here. Okay, it ran this over here and then dropped. Where is our breaker block? You know, ideally, now this is ideally, you know, you could take this as your breaker block, this whole move right here, the last set of down close candles like this to this before this push. Yes, that is fair enough. All right, as your breaker block. So let's mark that out. Let's mark that out. Okay. So what do we do? Price has run out liquidity and it has come back and closed the candles body above this, retested to this breaker block and shut down. Okay. If you wanted an earlier entry, you could have, this one was a bit riskier, but of course you can see this little move here. You could consider that as your breaker block. This down move to buy up and then break back. Okay, this is the breaker block. Okay, I showed you for a buy the last time. This is for a sell. So a down move buys, takes out liquidity, and then closes below. Okay, you just about closed here. So this is even a better entry for you. So your entry would have been here at this breaker block, stop loss here, and then your targets here. So you would have gotten a nice, let's see what the risk to reward would have been like. So this is where my entry would have been. Okay. Okay. So this would have given you at least a 1:2.1, but you can see it went even further. So I hope with this example, you have learned a thing or two. Let me show you something that happened. Final example. Let me show you something else that happened. I think that was Wednesday. Let's check out Wednesday by 8:20. So these things, usually you should get at least this kind of movements in one macro per day. You get your 2 hour for that day and you are done. So this is Wednesday. So we're going to check out our 8:20 to 8:30 macro. Like I said, this wasn't the macro ICT gave himself. If you're wondering what ICT is inner circle trader. If you know you're new, I'm also going to leave his YouTube link in the description to this video. But let's check out what price did by between 8:20. So for the 8:20 macro, I like looking, even though the macro exactly is 8:20 to 8:30. All right. If the rate, I like looking for rates from 8:10, not just 8:20. Okay, because from 8:20, sometimes that's when you just get your entry. The rate might have happened before then, like allow 10 minutes before then. So this time we're gonna mark out from 8:10. Okay, cool. To, and remember it's 8:30. Okay. So where's 8:30 here? Okay, this is 8:31. This is not a day we should have actually traded. I think, I'm not sure I want to give this as an example to you guys, because definitely on high impact news day, we do not trade. Okay. But you would see that, you know, after 8:10, this came and took out all this liquidity here, took it out. Not the best example, but you get the idea, okay? Not the best example because the displacement here wasn't the best. All right, there was a volume imbalance here instead of a fair value gap. I'm not seeing any fair value gap. And then there was candle closure, it retraced, and Not the best example, but hopefully you get the idea. Okay, there are cleaner setups. I personally didn't take this because it was a news day. I just wanted to show you guys an example of what it could look like. So just look at it at those times of the day. You can do 8:10 to 8:30, 9:50 to 10:10 a.m., 10:50 to 11:10 a.m. It's another actually from 11:50 to 12:10. Okay, and then 3:15 to 3:45 p.m. All times are in New York time. New York time. All right, so you can check that out, see how it goes. I'll make more detailed videos later. Have a fantastic day, and I hope you've learned from this. If you learned anything from this, just make sure you don't miss out on my subsequent videos where I'll be going into more details. Just make sure that you subscribe and hit the like button so that you'll be able to get feed like this frequently. Don't forget to hit the subscribe button right now. Don't forget to hit the like button right now. Cheers.